You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody. That music means we are back once again. It is Monday. It is 2 p.m. Central. It is 3 p.m. Eastern. You know what's going on in the world of crypto derivatives? Let's find out together. It is time for the Crypto Rundown. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-engaging, at least we tend to think so, Options Insider Radio Network. Remember, if you like what you hear on the Crypto Rundown side, make sure, you're listening to the full network. If you're not, you're missing out on nearly a dozen other programs that cover the wide gamut of the world of options. And then, of course, if you do like what you hear, keep throwing some stars our way. Obviously, we've been doing the network for a while, even this show for a little bit. So we have quite the backlog of reviews. But the more the merrier out there. Does help new people continue to discover the world of crypto derivatives. There's new people discovering this content and indeed these markets all the time. They need a way to find good content. So all those reviews do help people at the end of the day discover the content. And of course, if you want to discover more content in your lives and you want to go above and beyond the full network, only one place to go, theoptionsinsider.com/pro. Great pro Q&As coming up on Pro Q&A 100 this week. Hard to believe. It's already been 100 episodes, as well as, of course, Options Oddities, live access to this and everything else we do here on the network. And, of course, nearly 200 archived episodes up there on the feed for you guys to enjoy. The second you sign up, giveaways, a whole bunch more. Theoptionsinsider.com, the place to go to learn more. As we go on into our first segment, it is time to roll out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show where we welcome on guests from throughout the world of crypto derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. Next up, we have a newcomer to the program and indeed to the network. He is Brandon Mulvihill, the co-founder and CEO of Crossover Markets. Brandon, welcome to the Crypto Rundown program.
Hey, how are you doing? It's a pleasure to be here, and I think I might literally be on the hot seat today because it feels like my AC might have just gone out, so it's starting to warm up in here. So
this
will be fun.
Where are you beaming in from? Are you from the South?
No, I wish. I am in the suburbs of New York. So I'm actually speaking to you today from Connecticut, and it's warmed up a little bit this weekend. Not too hot today, but comparatively warmer than it has been this winter for sure.
Suburbs of New York. Yes, Connecticut often described as that, and it is indeed the case. As a Connecticut native myself many years ago, I can certainly speak to the joys of Connecticut. But you know what? It's not the Connecticut hot seat, listeners. It's the crypto hot seat. So let's get into some of that fun right now. Brandon, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the financial and indeed crypto space. And then, of course, answer the million-dollar question for our audience. What the heck is crossover markets?
Yeah, sure. So happy to do both of those. So I'm a foreign exchange guy. And in fact, the three founders of Crossover are all TradFi folks. So I spent the last 18 years in foreign exchange. I cut my teeth in retail. And so I spent 13 of those years at a retail FX and CFD provider called FXCM. Most of my time there, I was managing their institutional department. We called it FXCM Pro. And for all the crypto listeners today, totally analogous to what you would see with Coinbase and Coinbase Pro, or with other analogies, whereby we were predominantly a retail shop that leveraged the economies of scale from the retail world to cater to kind of mid-market participants in the institutional space of foreign exchange. I also spent 5 years before I launched Crossover at Jefferies, where my colleague Anthony Mazzarese and I built up an FX prime brokerage business. And then our third co-founder that I would like to just highlight here is a guy by the name of Vlad Reisen. And Vlad Reisen is our CTO. Vlad Reisen has 35 plus years experience, 25 years in equities, where he operated multiple trading venues in that space, and then 10 years in foreign exchange, where he was the CTO of Fastmatch, which later sold to Euronext. And so he joined the Crossover team from Euronext FX. So what is Crossover? The three of us founded Crossover a year ago. We are an execution-only trading venue. And what that means is, when we look at the crypto market, or how it's been operating the last several years, it's been driven by exchanges. Another way to think of an exchange is a vertically integrated system. You might have heard that phrase before. What does that mean? It means when you trade with a crypto exchange, you're actually trading with a broker who also has an exchange, who is also a custodial provider, may even be a token issuer as well. So it might be multiple businesses in one. We think the future of institutional trading is going to segment. We already see signs of this. We think it's going to decouple these things. We think custodians are going to provide custody. Market makers are going to make a market. And for us, the vertical that we are concentrated in is in the execution venue space. And that's what Crossover Markets is up to.
That was interesting. You guys bill yourselves as the crypto venue for HFT. And we've had a lot of guests come through this hot seat over the years, a lot of them talking about different aspects of the institutional crypto space. Not a lot of them talk about HFT. The HFT and crypto, quite frankly, those are two terms that don't usually go together. Most people don't think of the crypto market and think speed. And yet that's where you're leaning. So tell us a little bit about that. What makes a Crossover so ideally suited for the HFT players out there, such as there are in the crypto space?
Sure. Well, yeah, let's broaden it out, and then I'll finish with HFTs most certainly. I think let's talk about what has been discussed, maybe not as specifically about HFTs, but about institutions at large, is that there is tremendous growth in the crypto space with more and more institutions entering the space each and every year. That certainly, I think, is widely appreciated. When you look at institutional needs, you're looking at things like, for example, the trading technology just needs to come into its own, right? And so what does that mean? If you look at crypto exchanges, what's been on offer so far is you're seeing a lot of REST APIs, a lot of WebSocket APIs. And coming from TradFi, this is just not built for purpose for what an institution would need, right? They would need to access the API gateway they would want or would be used to accessing something such as FIX. Another thing I would just highlight very briefly is most people are trading in the crypto world through something like AWS. They're not physically hosted. In the TradFi world, that is certainly a foreign concept. Most people are trading in a physically oriented environment, and that's what we're doing over at Crossover. So our production servers sit in Equinix's data center, which is an LV4. And so right when I highlight those two things, and I want to get a little bit deeper, and I'm sure we will on this call, what you're starting to see is what we really cater to is institutions who are rather sophisticated. And the more sophisticated you get, normally you start to get into performance-related questions, whether it's throughput. You might then get into performance-related questions, which are speed. And once you enter questions around speed, you're certainly going to be talking about HFTs. And I just think speed in anything we do is important. So I know to date, it's kind of a common thought or phrase in the crypto world that speed has not mattered as much, or maybe it does not matter, or it's just not an applicable piece to the puzzle right now. And we just fundamentally disagree with that. If you can imagine, you're trying to buy, anything online, whether it's an airline ticket or some other good, and you're trying to buy it, your neighbor's trying to buy it at the same time, and your internet is 10 times slower than your neighbor. I mean, who's getting the better experience, and who's getting that experience done faster? Right? Speed is everything. And speed does translate to cost of trading, which is ultimately what we're up to, is to decrease the cost of trading. So that's what we're built on. And we think speed matters, and happy to kind of go into more detail as you see fit.
Yeah, it seems like people have just resigned themselves in the crypto space that, you know what, it's not fast. It's not going to be fast. And I guess they've made their peace with that somewhere along the way. Whereas in other markets, of course, you're talking sub-second, dramatically sub-second executions, and everything's about speed and zero latency. We haven't heard as much of that in the crypto space. But you're saying that's wrong. You're saying the people are just accepting a bad paradigm and they could expect more out of the crypto space?
Yeah, absolutely, because I think market structure is changing. And I think there's a correlation to why you're not hearing that. I don't think it's because it's not important. I think it highlights some of the flaws in the originating market structure of crypto. So, for example, going back to the idea that what is a crypto exchange? Because in my mind, a crypto exchange is a broker. It's someone who onboards a consumer, who asks you for your money. You're going to fill out their application, go through their KYC, their AML. You're going to collateralize that account, typically with some dollars, and then you're going to use that collateral to buy Bitcoin or any other number of coins. No different than if you open an account with a stockbroker and wanted to buy stocks or any other analogy. And so, looking at these brokers, as I said, they also have an exchange. They also are providing custody. They're providing multiple things. And so what they have is they have a captive customer. So for example, everyone who's on the call, if you just think of any exchange who you currently use to buy cryptocurrency, once you buy that cryptocurrency, and especially if you're day trading or you're doing any level of trading that's active, by definition, you're not doing one trade with that exchange, you're doing two. If you buy that Bitcoin, I would bet you most likely are then selling that trade to that same exchange. In other words, what the exchange has sold you is they're selling you things outside of the execution technology, outside of that execution layer. They're selling you things like safety of funds or the protection around holding your coin with them, because they may have a custodial solution that has certain advantages and so on and so forth. They may have some research that they can bring to you or some information about why you might want to look at this coin versus another. They may have a token. They may have all these other things that are there to attract you to come in. But at the end of the day, what they're offering is not a fungible environment. It's very unlikely you're going to buy Bitcoin on Coinbase and sell it on Binance, as an example. Whereas when you look at the traditional financial world and you're looking at what we're bringing into the crypto world with our core product CrossX, it's simply an execution layer. We're only ever competing for one side of your trade, right? We don't have you captive. So our institutions access our platform through a prime broker. Our day one prime broker is Hidden Road Partners. There'll be others on the menu as we progress. In fact, we've got two we're speaking to right now. And so what that means is when clients are looking to buy a Bitcoin, they want to buy at the cheapest rate. And we're simply competing for that cheapest rate. So because we don't have the client captive, we have to compete every second of every day to win your business. Otherwise, you're not going to trade with me tomorrow. I don't have anything else that's holding you captive to have to trade with me. So we think that things are correlated, and we think the market structure is changing now.
I have to admit, just as a complete aside, how refreshing it is to me, Brandon, to hear you say up front that you are a broker. We've had just about every crypto exchange and liquidity venue you can imagine on this show during its run. And all of them have come out front and center. You know, we are the CME of crypto. We are an exchange, and they describe themselves as an exchange. And yet, as you just said, all of the activities they're engaging in, at least the lion's share of them, acquiring customers, providing that front end to the customers to access the markets, custodying accounts, all the things that you would traditionally associate in traditional finance with the brokers. That's always been a big touchstone of mine. At the end of the day, most of these firms are brokers, and they do provide a execution component as well of some sort of crossing matching engine. But outside of that, they're primarily brokers. So I have to say, Brandon, just as a complete aside, I think you're the first exchange to come on here and admit you're a broker, and I find it very refreshing, sir. I like it.
Let me backtrack. I'm not the broker, right? Because so let's parcel that out. So let me first start by agreeing with you, right? For sure, any crypto exchange is by definition a broker, okay? And going to your point about the CME, language always gives it away, right? Because if you're actually an exchange, then you would have members. I don't know of any real exchange in the world that doesn't have members, right? But these crypto exchanges, when you hear them speak, they don't have any members. They have clients. There's a difference between the two. They tout they have 20 million customers, or they onboard 1 million customers a day. That's a very distinct difference between a client and a member. So they're absolutely a broker. And the other reason you can kind of validate this, and by the way, there's nothing wrong with this business model. I was in the brokerage business for 18 years. I love it. But when we look at the regulatory implications of what's going, if we could talk about what's conceivable to happen in the United States or what's conceivable to happen in continental Europe, the regulations are going to come out and they're going to look very much like brokerage regulations. They're going to have capital adequacy. They're going to look at the marketing and disclaimers around soliciting and onboarding customers. They're going to look very closely at the onboarding practices of KYC and AML. And all these things are going to come out. They're going to be very new to the crypto world. And my view and my hunch is that these things are going to be predominantly things that all regulated brokers do currently in every other asset class. They're not going to be surprising in that regard. So the only point of slight disagreement I just want to circle back to is Crossover Markets is not a broker because for two reasons. We don't have credit counterparty risk, and we're never involved in the exchange of assets, be it fiat or crypto or otherwise. Meaning, in order for a client to trade on what we call our execution venue, our ECN, CrossX, you have to have a credit sponsor in the form of a prime broker, which for us, day one, is Hidden Road Partners. So for a client to access us, to access CrossX, you also have to have an account, an institution has to have an account at Hidden Road Partners, and that's where you collateralize. And that's where, for all the activity you do today, you settle up with Hidden Road Partners. And what CrossX does is offer the execution, the actual matching, order routing, liquidity management for whatever subset of trades we got from you on that particular day. So we are distinct in that regard, in that we, in traditional finance, the Europeans would call our venue an MTF, the Americans would call it an ATS, but we are a distinct layer in the ecosystem. There will be, if you look at what's happening, we think where the market structure is going is you will have prime brokers, you will have custodians, you will have execution venues, which is us, you will have market makers. And that's where we think the dynamic is changing right now as we speak.
Fair enough. I think we can allow that distinction here on the show today, Brandon. But you mentioned regulation. Let's get to that now then. Gensler made some comments recently here in the U.S. It seems like, there are not a lot of things that have a universal viewpoint. It seems like it could be in politics, it could be in the financial markets, could be any of those worlds. It does seem like people were unanimously disappointed in what Gensler had to say when it came to the crypto space, whether they're in the traditional finance world, whether they're crypto heads. No one seemed to like it. People seem to want clear language, clear, decisive action, and we didn't really get a lot of that, it seems like, from Gensler. What were your thoughts on some of the quote-unquote roadmap that Gensler laid down here for U.S. crypto regulation and what it could mean for the institutional side going forward?
Sure. Well, I think it means right off the bat, it means everything. When you think about, the institutional landscape, you can just right off the bat, you can imagine, who are the small institutions that want to participate all the way to who are the largest institutions with the biggest brands and the biggest the most amount of credibility and balance sheet and all of these things. And when you go to the top layer of the institutional space of what's on offer, what's the potential wallet of what this market could become, none of us are going to see en masse the highest level of institutions enter the space until regulatory clarity is provided in a particular jurisdiction that institution wants to participate in. And I think that, certainly the belief of crossover markets, and I think just looking at other participants in the ecosystem, I just think there's a massive clamoring for regulation. It's not a stretch to look at what Coinbase, they've been very vocal that they want regulation. I think everyone wants to be doing the right thing. Everyone wants to get their corporate governance in place. And in order to do that, it's only natural that they need instruction. They need a document that you can pull up and you can read through all the pages and you can very clearly understand, what are the rules of engagement? What are the different client classifications? What are the different product types as defined by the regulator? All the way down to how does the regulator think about a particular instrument? Obviously in the U.S., there's a lot of discussion over which coins could be considered a security and which may not. And that clarity alone would be, I think, pretty critical in taking a big step forward. So I think what's happening now, and I think your sense is right, there's a collective level of frustration because I think people really want to do the right thing. I think people have positioned themselves in a way to be able to deal with regulation. I think they want that. I think they know it's needed in the market to establish credibility. And certainly since the fall of FTX, adding credibility into the space is probably a pretty big objective. And so I think the level of frustration is pretty widespread in just wanting the U.S. to come out with very clear guidelines so that everyone can understand where do they fit within those guidelines and what do they need to do to bring themselves, within that proper regulatory scope. And once what it means to the industry, and I know if you counter what's happening in the U.S. to what's going on in Europe, and you look at MiCA and some of the beginning of regulatory clarity coming in continental Europe, there's a lot more optimism over there because there's starting to be a lot more rigid, a lot more clarity around the regulatory framework. And so people are excited because I think the one thing everyone will agree on is once the clarity is brought in and it's very clear what you need to do, I think you're going to see institutional adoption take a big step forward.
Yes, we have many guests from overseas on this program, and we're often jealous of some of the regulatory certainty they have versus us here in the U.S. But you touched on one of the elephants in the room, which is, of course, FTX. We're all living in this post-FTX world. And one of the things we tried to gauge on this program from its very inception is what is the institutional interest or demand in crypto. And in the early days of this program, which was also really dovetailed with the early days of crypto derivatives, you saw SIBO and CME listing their products. You saw the run up to 20,000. Then the earliest crypto winter, institutional demand ebbed and flowed. And then we saw the big run up to 60,000. And so a lot of institutions got interested in crypto during that period. Then, of course, the big sell off over most of last year, that seemed to curtail a lot of interest. Then, of course, FTX happened, and that really seemed to be a catalyst for a lot of firms out there. A lot of them who maybe had suspicions about crypto all along, they said, hey, this is really just the Wild West. That's it. We're washing our hands of it. This proves and verifies all of our worst assumptions about the crypto space. Others said, this is a great opportunity. Maybe we'll see more centralization, more clearing. Maybe we'll see more DeFi. It really seemed to break the market up into a lot of different interesting packets, but it also understandably made institutions once again leery of this space. And now fast forward into 2023, and we have FTX mostly, it seems like, in the rearview mirror. And then we have this protracted rally for most of this year in most of the leading crypto, which maybe if some firms were spooked to the sidelines after FTX, maybe some of them starting to get a little bit interested in this space again. Fast forward now to you guys over there, Brandon, at Crossover. You guys have your fingers on the pulse of institutions. What are you seeing and hearing from them right now in this post-FTX world in terms of their interest in these markets, in this space? Are they back to their pre-FTX level of interest? Are they still a little spooked? What are you hearing and seeing when you're talking to them behind the scenes?
Right. So there, I think that broadly speaking, my from the conversations I've had is that year over year, there is more institutional demand and more institutional interest, not less, regardless of these style events. And now, right off the bat, what we can touch on is, what were the practical implications of FTX on the institutional market? And the first was this: is the crypto market, if you look at it operationally, and again, this is just from the viewpoint, the perspective of an institution, is that operational friction in crypto right now is at an all-time high, or has been up to this point. Meaning, if you're an institution and you wanted to trade with 100 counterparties, 100 exchanges, let's say, that means you're bilaterally settling with 100 exchanges. That means each and every day and intraday, you are moving dollars around, you are moving coins around. That is operationally very, very inefficient, and it's very costly. In the TradFi world, in equities, there would be a clearing structure. In FX, there's a prime brokerage structure. And all that means is an institution in, let's say, a foreign exchange can trade with 100 counterparties, but net settle with one. This is very, very powerful. And pre the FTX collapse, the margins were so large and the opportunity was so good that institutions that got into the market just came in very hot and heavy. And if they needed to settle with 100 companies, that was fine. Post FTX, that's no longer the case almost overnight. So you saw November, December, January, a lot of companies hit the pause button. They went back. They looked at the companies that they were trading with and facing from a credit counterparty perspective. And they took, if that list was 100, it was 100 minus X. And people who were aggressive maybe dropped half, and people who were more conservative probably dropped 80% of the counterparties that they were trading with. And so what I would say from the fallout of FTX, it is the first big shoe that dropped that fundamentally has changed where market structure is going. And so if you are one of those institutions, now one of the things you're really looking at today that you were not looking at maybe a year ago, or at least not as closely, is the idea of going and getting a prime broker. The idea to go face another institution who you think from a balance sheet perspective, from a credit worthiness perspective, you're comfortable facing, who can then give you market access to go trade, with dozens of other counterparties so that you can do it in an efficient way and in a safe way. So I think practically speaking, that's probably the most immediate thing that happened from the fallout of FTX. probably the larger thing, and we just touched on it with regulation that came with the fall of FTX, it comes back to the fact that there's no regulatory clarity, right? When you look at how FTX fell and what actually happened, it is really hard to imagine that could have happened identically if the market were as regulated as any other traditional financial market is. If the financials, had to be audited and reported on a consistent basis, if the level of due diligence was required from multiple participants in that company, if there was just any regulatory framework that existed in equities or in foreign exchange existed before that collapse, it would be very hard to imagine that still would have happened. And so I think for some institutions, and again, the larger, the higher ranking the institution in terms of credibility and balance sheet and size and brand and so on and so forth, I think the more likely you are to find that they are still very interested in the digital asset space and in particular cryptocurrency. They are still building battle plans. They are still having conversations in the market, but they are unlikely to participate in any significant way until clarity is brought to the market from their local regulator.
Well, Brandon, this has been fascinating. Unfortunately, we have to keep rolling with our show. But before we do that, before we roll back the crypto hot seat for this week, we like to leave our audience wanting more. So before we go, if there's anything you can leave our audience with in terms of hints or teases of what they can expect from you and the team over there at Crossover Markets in the coming months, now is the time, Brandon. The floor is yours.
Yeah, I'll give you guys 3 teasers, if you will. I give you a teaser on speed and performance. We are, when it comes to speed, we are executing trades right now in sub 20 microseconds, but stay tuned. We are coming out with a new API protocol, and you said coming months, so maybe in a couple quarters. That's one to keep an eye on. Number 2, new data center locations. We're currently in LD4. We're looking to expand our geographical footprint in that regard, so we'll be becoming closer to where some of your listeners may be located currently. So keep that in mind. And the third is crypto derivatives, specifically cash settled cryptos. Some do it in the form of a perp, some call it a CFD, some call it an NDF. But we have a very large partnership that we're looking to announce this September that will specifically address the crypto derivative space.
Does seem like cash settled is the wave of the future. After all that love, all that noise, all that Sturm and Drang about physically settled, no one seems to want it, Brand. Everyone wants to go the cash settled route. So that seems to be where we're shaking out there. So that'll certainly be interesting. I'll have to bring you back on around that September timeframe to hear more about that. And in the meantime, Brandon, if folks want to check out what you and the team have cooking over there at Crossover, where should they go? What should they do?
Get crossovermarkets.com. Come to the website. Shoot us a note. Give us a ring if you have any questions.
There you go. Crossovermarkets.com is the place to go, listeners, as we keep on going right on into the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we do exactly what the name implies. We break down all the action in the world's leading digital asset. Talking the big dog, which is Bitcoin. And, not looking a heck of a lot different than it was at the end of our show last week. The end of our show last week, we were a little bit north of 27,500, 27,510 to be precise. Coming into the start of the show today, we were at 27,442. So down a whopping 68 handles on the week, listeners. So for Bitcoin, not exactly a huge net move on the week. Had a little bit wider range throughout the scope of that week. Started exploring some more mid 20,000 levels again to the downside. In particular, about 26,300 was pretty close to the bottom. Actually broke through it ever so briefly, 26,296 to be precise. That was on Friday last week. And the high came a couple of days after our show last week, a little bit north of 28,000, 28,200. So actually had about close to a 2,000 point range on the week, which is not nothing, even though we did settle out almost exactly at the bullseye for where we were this time last week. That means the vol holding firm, actually ticking up a little bit this week. I think some of that downside had a little bit to do with that this week. Not much, though. At about a 50.5 when we kicked off the show. We were at a 48 this time last week, so that's up a whopping 2 points. And by the way, if you want to check out all of this data, the vol, the skew, everything else going on over there in the world of crypto derivatives, only one place to go. Amber Data, AMBERDATA.io. AmberData.io, the place to go to kick the tires and light the fires on these analytics. And again, I've said it before, we are just scratching the surface on what they have to offer here. It's a only 1 hour show at the end of the day, listeners. So only so much we could squeeze in. But if you want to see all of their offerings in the world of crypto derivatives, check them out over there at amberdata.io. Like this, for example, you can go check out not just the front month vol, but also what's going on a little bit farther down the term structure. Maybe you want to go up half a year. Let's see what's going on out there. Usually saner heads are prevailing a little bit farther out on the term structure. In the nearer portion, you get all sorts of madness at work there. And on our last show, it was about a 50.25, so the vol was slightly higher going out about 6 months, and that is the case again this week. Ever so slightly, though, only about a 51.20, so it's up about a point from where we were this time last week, and still a little bit higher, about 0.75 of a point higher than the front month vol, but not a huge slope to that term structure from front month all the way out to 6 months, which is kind of the opposite of what we're seeing in products like the vol space right now, like VIX, where we're seeing an extremely aggressively steep contango. Not quite seeing that out there in the Bitcoin vol this week. Let's go out to the skew, see if we've seen any major changes. And we did have a 2,000 point range, even if we did settle out pretty much at the bullseye this week. Let's see if our skew evolved at all. And last week we were about almost a point negative, about 0.75, so pretty close to flat. Well, this week it has swung to the positive, so maybe some of that dalliance we did with a 28,000 strike got some people excited to the upside. Either way, coming into the start of the show today, we're a little bit north of a positive 2, about a 2.3. So you're talking about a 3-point swing in the upside direction this week from a skew perspective. So not a huge move, but not nothing either. Still mostly flat, but a little bit of a positive bias. You can say the same for the longer term skew as well. You go out 6 months. It was almost 2 points last week, about 1.75 points to the positive. This week, a little bit closer, about 1.9. So they're both hanging out right around 2 points worth of positive premium. So again, not a huge difference between the front month skew and the 6 month out skew, which again shows kind of everyone, a lot of people waiting maybe for that next shoe to drop out there in the crypto markets. In terms of OI, remember March took a lot of paper with it on the expiration front. Starting to rebuild that a bit out there. On Deribit right now, there are about 207,500 calls open. That's up about 9,500 from this time last week. The puts, 92,500 of those open. That is up about 1,500. So again, the puts having a hard time getting some love. Maybe if we were still hanging out around the 26,000 level, then maybe they see a little bit more puts on the tape. But for whatever reason right now, only about 1,500 more of those blocking in out here this week. You know, we mixed it up on the show a little bit this week. We're trying to find ways to present this data to you in more interesting, more compelling, more useful ways. And we've been talking a lot about the size positions on the overall strike perspective. I know for some of you out there and newer to options, that's a little bit confusing, thinking of things from a net strike perspective. That's how market makers, liquidity providers traditionally view things. But I know for a lot of retail, you don't. You look at the calls, you look at the puts, they're separate entities. So we're going to try to explore the top open interest, the top changes over the past week from a different perspective. And maybe this will help line you up out here. We'll do the top 5 open interest gainers or losers on the week. Let's start with number 5. We've got the 25,500 puts out there this week. It's all gainers this week, which first off is interesting. Again, going back to what we were talking about with adding more OI post-March expiration, and indeed now April in the rearview mirror as well. The 25,500 puts, they gained 2,100 contracts this week, followed by number 4, the 25,000 puts. So again, as we were flirting with 26,000, some folks may be piling into some puts down there, a little bit below it. 25,000 puts coming in. Number 4, they gained 2,300 contracts this week. Number 3, we have the 31,000 calls back up to the upside. So that's interesting. No 30K, none of the strikes you might assume, but 31,000. They gained 2,500 contracts this week, followed by number 2, the 28,000 calls. So coming back down there, 2,600 contracts were gained there. Again, we did touch that level ever so briefly this week, so that makes some sense. So that would be in our top 5 this week. And the number 1 open interest mover this week, the 35,000 calls. They gained 3,600 contracts this week. So again, kind of interesting, kind of fascinating. Let us know if you prefer us breaking it down for you this way. It might be a little bit more intuitive for some of you out there, especially those who are newer to the world of options. You know what is still kind of the newcomer to me, even though it's been around over a year now, coming up on 2. It's BITO. Bitto, a lot of you like to play your Bitcoin using Bitto at a 1580 when we kicked off the show. That puts it literally unched on the week, which is kind of interesting. Bitto kind of hanging out, even though we saw a pretty impressive range out there in the Bitcoin futures and the Bitcoin spot. At the end of the day, Bitcoin spot also settling out pretty much unched, so makes some sense that Bitto would do something similar. Again, the ADV continuing to move in the wrong direction. Only 40,000 contracts on the tape. Or I should say the ADV is only 40,000 contracts. That's down again 2,000 from where we were this time last week. So for whatever reason, Bitto options were lighting it up in the last month or two. They seem like they've kind of fallen off a little bit. Today we're doing 40,000 already so far. So it's an active day out there today. So we're hitting that ADV, which is something good to see. By the way, the most active contract out there today, the May expiring on the 19th. So this Friday, 16 half calls, almost 13,000 of those have traded today. So looks like that's the lion's share of what's going up. Looks like some folks are dumping those. Maybe some aggressive overriding going on. Maybe some folks also own some 16 half calls. They're getting the heck out of Dodge. Either way, folks crushing the bid nearly 13,000 times on the May 16 halves in Bitto this week. In terms of, or I should say today, really, in terms of action, what are the top positions out here in Bitto options? You know, for a while, we've been hanging out at 7-3 calls over puts in the top 10. It has shifted. It is now 8-2. So more calls in the top 10 out there. Number 10 in the Bitto options this week, we have 14,000 of the Jan 2025, so longer term 20s. We were just talking about some 2025 paper on the show last week. Now we got the 20s coming in at number 10. Number 9, 14,000 as well of the June 10 puts. Number 8, 17, almost 18,000 of the June 5 puts. Number 7, about 20K of the Jan 18 calls. These are 2024 18 calls, so a little bit closer to home. Number 6, 25,000 of the June 8 puts. Number 5, back to January, 27,000 of the Jan 65s, one of my favorites. Number 4, 28,000 of the Jan 15 calls. Then we go to number 3. This is what we were talking about last week, the 25-35s. Those were pretty active last week. Those remain two of the more sizable positions on the tape. Number 3, 30,000 of the Jan 2025 35 calls. Say that 5 times fast, listeners. Followed by number 2, 33,000 of the Jan 2025 25 calls. We looked these up last week. We thought might have been a bit of a vertical, but turns out it wasn't. They went up on different sessions, unless they were legging into things over time. You never know, but they didn't go up as one spread on one day. And then the big dog out there still this week in Bitto options, 46,000 of the Jan 2025 30 calls. So splitting the uprights there. So a lot of interest, a lot of action in the Jan 2025 upside in Bitto options these days. So read into that what you will, listeners, as we keep on rolling into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, a portion of the show where we explore everything outside of the big dog, which is Bitcoin, except for right now, the top of the segment, when we break down the top 10 from a market cap this week. Kind of hard to avoid Bitcoin in that conversation. If we do avoid Bitcoin, you know, things have changed markedly in the crypto world. Not quite there this week, listeners. Number 10, we got Polygon at about 8 billion exactly. So that's pretty much the cutoff for the top 10 this week, 8 billion. A little bit lighter than it has been in the past, but also a little bit above some of the days, the dark days of the nadir out there as well, when we were in the 7.5 million, even less level to break into the top 10. Number 9, Solana, almost 8.5 billion right now, about 8.4 billion. Number 8, Doge. Doge has a vice grip on that number 8 spot. Nothing can budget these days. A little over 10, about 10.1 billion with the market cap. Number 7 is Cardano, almost 13 billion. Number 6, XRP, 22 billion. We talked on the show last week about the just extreme expense. I think it's been over $200 million they've spent defending themselves from the SEC with no visible outcome in the near future. That's got to be frustrating for those folks. And for folks who want to trade this too. You know, let's decide one way or the other. Can we trade it or can we not? Is it security or is it not? And then we can all move on with our lives. This endless limbo for XRP doesn't serve anyone. Number 5, USD coin, $1 is where it's hanging out, of course, which means 29, almost 30 billion with the market cap, a little bit shy of that 30 billion level. Number 4, BNB, 49 billion, pretty much exactly. Number 3, Tether, 82.8 billion to be precise. Number 2, it's ETH, 224.8 billion. worth of market cap. And number one, the big dog, Bitcoin this week, $531 billion. So right around that $500 billion level. We all know, if listening to the show for a while, it was north of $1 trillion for a brief period as well. Not quite there these days, listeners. What is there right now, though, not quite in terms of highs, but in terms of exactly where it was this time last week, is ETH. Man, we could have just re-racked the show from last week and played it again, listeners. We were at an 1831, almost 1832 in ETH on the show last week. Coming into the start of this show, 1830, pretty much exactly. So we're down pretty much about 2 points on the week. If you know anything about ETH, listeners, that is a rounding error. We can move that in seconds. So 2 points net on the week, that's not a heck of a lot. A little bit more range as we expand the purview across the entire week. We got up to about 1878 on the upside. That was on Wednesday. And the low came on Friday, 1749. So a little bit wider range, but still not quite maybe the banger week we've gotten used to out there, which is probably why the ball is coming in a little bit. We were at 50 and a quarter last week, so just slightly north of 50 on the show last week. 47 and a half right now. So ETH vol continuing to tread water or come in a little bit out there. Same deal on the 180-day front. 52 last week, 51 and 3/4. So pretty much treading water from a vol perspective a little bit farther out. Again, a lot of people waiting and seeing what the next shoe is going to drop out there in the ETH space and then trading accordingly. Skew, let's see what's going on from a skew perspective. Last week, we were slightly negative, about -1.5. Coming into the start of the show today on that front month, we were -2.5, so a little bit more negative. So maybe the fact that we dipped a little, we rallied a little, then ended up settling out right where we were. Maybe that's getting some folks to have a little bit more interest in the downside. Not much. I mean, -2.5, we've seen ETH skew get much more negative than that, but -2.5, it's not quite flat. 30-20 skew going out 180 days now, listeners. Last week, we were pretty much exactly flat, and this week, slightly negative, about -1.2 points. So a little bit of slight negative bias creeping into the term structure. But then again, it's not market at all, so that could change on a dime if we see some interesting action out there in ETH over the coming week. In terms of OI, there's about exactly 2 million calls open on Deribit right now. That's up 150,000 from this time last week. And there's about 780,000 puts open. That's up about 63,000. So once again, calls maintaining their close to 3-1 lead, a little bit less than that here out there on Deribit this week in ETH. Same deal for the top five. Let's talk about the top five OI movers, the OI movers and shakers this week. See what's going on out there. Might be a little bit more intuitive for you folks. Number 5, we have the 1,800 put this week. That gained 21,600 contracts. So again, once again, also all gainers this week, which is kind of interesting on our top 5. So people piling into some new strikes this week. Number 5, 1,800 put again, 21,600 contracts open there, followed by right behind it by the 16 half put, 21,800 new contracts piling in to that strike, which again, the low for the week was 1749, so 16 half. Bit of a ways out there, but again, kind of like we saw with Bitcoin, maybe when we were flirting with the lows for the week, some folks may be finding a little bit of interest and a little bit of downside. Then back to the upside we go for number 3, the 2,100 calls. They gained 34,000 contracts this week. Number 2, the 1,700 puts, right back down again. Close to where we settled out for the week to the downside. They gained 38,000 contracts this week. And the big gainer this week, the 2,000 calls. Now, this makes more sense than we saw in Bitcoin. This is a psychologically important level. 2,000, obviously, folks piling into that to the tune of nearly 44,000 contracts gaining on the 2,000 calls this week. So, moral of the story on the OI front is people piling into new positioning and then some interesting strikes across the board in ETH and in Bitcoin. Before we get out of here for this week, let's roll through some of the rest of the altcoin universe, see what's going on out there. Our friend Solana gaining a little bit of love back. It was about 20.5 on the show last week, about 21.25 this week, so up about 0.75 of a point. XRP, we just talked about it. I don't need to belabor it again. 42 cents last week, a whopping 42.5 cents this week. Going to be a while until XRP can see its own shadow and move again. I think we're all kind of stuck in limbo until that happens. Dogecoin, 7.1 cents last week, 7.2 cents this week. So nothing much going on there. Litecoin catching a bit of a bid, 76.61 last week, 87.81 this week, up a little over 11 handles on the week. So a nice little pop for Litecoin. Cardano, 35.8 cents last week, 37 cents this week's up a little over 1 cent, about 1.2 cents on the week. Polkadot, 5.25 last week, 5.35, 5.37 or so. This week's up about 13 cents or so on the week. Good old Shiba hanging out, pretty much unched. Because we just had him on the show and it's kind of fun. A lot of you liked it. Let's throw in Syscoin as well. It was 11.5 cents last week, 11.8 cents, so kind of unched out there as well. All right, listeners, that theme music means we've come to the end of another epic journey through the world of crypto. I want to thank our guest, Brandon Mulvihill from Crossover Markets, for joining us on the show today. Remember, check them out if you want to learn more. Crossovermarkets.com. All one word, no hyphens or anything in there out there. If you want to see what's cooking in the land of all things crossover, that's going to do it for us on the network today. You're going to see some fun content hitting the network tomorrow from all the stuff we've been doing out here lately. And then back again on the live side on Wednesday. Got a great trifecta of content coming at you, including Options Bootcamp and indeed Pro Q&A 100. So listeners, if you're not on the pro side, maybe you've been thinking of want to check out what's going on there, maybe in honor of the 100th episode of our Pro Q&A. Maybe we'll open that up to all you folks out there so you can all get a sampling. Again, our guest there, Mr. Matt from ORADS. He's a great guest. Talks actually a lot of crypto as well. I've been on crypto panels with him in the past. So he is also a crypto guest, even though his bailiwick is options analysis and back testing and how to effectively trade options. So you have questions along those lines, feel free to get him in. If you want to come play on the 100th episode and maybe ask some crypto questions, I'm sure he wouldn't kick you out of the session out there as well. So that's coming on Wednesday. Of course, Options Bootcamp. A lot of you should be listening to that show if you're listening to this one. It's very much the educational flagship here on the network. And then back throughout all the rest of our content next week. And then coming back again on Monday, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.